Good morning. I thought it would be kind of fun to start the new week off with a game planning session. Without getting into too much detail, obviously I don't want to be making recommendations, but what I do want to do is help you have a framework for going through both stocks that have a certain volatility as well as stocks that have a liquidity that matches your risk tolerance, which is extraordinarily important. Far too many traders that I have seen have just come into the business and just wanted to start trading anything because of volatility without actually matching which stocks they trade to what they have in their resource bank. And when I say resource bank as well, don't ever forget I'm talking about your experience level. Just because other people are trading Netflix and back in the I hate to say, but back in the day when Apple was five, six, $700, and this is really probably a little bit more prevalent in the proprietary trading world. I saw a little bit with options traders when I would be doing seminars at one of the traders expos and whatnot, people taking longer term positions in Apple when it was way up there. But you have to pick the right fights. Resources must match your goals. And if you decide to pick the toughest fight first, it's going to be very, very difficult for you to start out with confidence and or especially learn how to trade with conviction. And you have to learn the personalities of the stocks you're trading. So I thought it would be kind of cool just to go through a general framework. You can see here, as I've been telling everybody, I use FinViz for my screening, the free service. I don't pay for the premium version. You absolutely can, but I think the only difference between the free and the premium one is live quotes. So since I'm specifically using FinViz for my pre-market game planning, I don't need the live quotes, so I don't need to pay for it. So everything you're about to see right now is the free version of FinViz. So I'm not trying to sell you anything. It's got nothing to do with that. It's really more just me helping you get a framework. So you can see one of the most interesting parts of FinViz here is you start out looking at groups and you get a pretty decent feel for price action. Now, what's interesting is we had mentioned, somebody had brought this up a couple of times in the Six Figure Trading Group, our Facebook group, mentioning which charts they look at. And what's very, very interesting is you need to put the charts that you start looking at in the context of the trade objective. So in other words, how long do you plan on holding the trade? If you plan on holding it an hour, 5 minutes, or 5 weeks, you need to use sort of a top-down approach where you're looking at a larger or macro picture, which basically in technical analysis is nothing more than multiple time frame analysis starting out in the higher time frames. Some people choose to do that with a fundamental analysis. We're just going to look at technical right now, although there are fundamental scans in here you can look at. So just as a general rule, going back, if you're a swing trader or even a day trader, really, you could probably get away with 6 month to 3 month performance and see where the money is actually flowing. A year is a little bit long, especially if you're a swing trader. Day trading and swing trading, you're kind of looking at a recent institutional order flow that you can trade within the time frame that you're looking to use as your entry triggers. So more often than not, day traders are looking at daily and weekly charts. You can definitely look at monthly. I'm not saying not to. Swing traders definitely weekly and monthly, and then you're dropping down a time frame, whether it's swing traders on the daily or hourly. I don't really know too many swing traders who time on the 15-minute chart because technically you're not a swing trader at that point anymore. And day traders will technically look at the hourly 15.5 and drop it all the way down even shorter than that depending on whether you're a momentum or an intraday trend trader. So you're looking to see what has been going on within the time frame that you're going to decide as your macro. So in my case, I'm usually trading quarter by quarter, whether it's a swing trade or a day trade. I'm kind of looking for those same types of ideas, whether it was earnings or whatever they happen to be, that follow through from one quarter to the next. And look, I mean, that's when they're reporting. Why wouldn't we look at it in that time frame? We're not looking to as active traders, let's preface that we're not looking to discover something in the financial footnotes that will allow me to hold a stock for 2 years. That's not what we're doing. Trading education blogs are specifically named trading. We're not investors here. Okay, there's a very big difference. It's a completely different business. So I'll generally start out with 3 to 6 months. I'll make note of, for instance here we have healthcare services, and you see healthcare again 6 months and 3 months. A little bit less here in the last month. So what I will generally do is now I will end up going to screeners and look down to whether industry or capitalization, however you want to break it down. So then ultimately you end up going and pulling up that particular healthcare, which is kind of cool. And that's only the first sort of scan. And as I had said, you really want to make sure that you find stocks that match your liquidity. And if I could just pull this over here just for a second to get it back onto the screen, you can see that there's various volumes of stocks, and that's where you're going to find the liquidity. Let me make sure it's on the screen there. Now, I want to make a very strong point here. There's a difference between liquidity you should look for in a swing trade versus a day trade. A day trade, you probably want something that trades at least 500,000 to 1 million shares, and quite honestly, I usually look for 2 million. And again, these are guidelines. They're up to you to do what you want. I am telling you, in my experience, has been the best way to approach it. If you're going to trade and eventually get to the point where you're trading size, you want to make sure that there's liquidity so you can get out of a trade. So when you're scanning, I'm going to show you a scan right now that I will generally run, not generally, that I always run for my day trades, specifically my equity day trades. And I'm normally looking for at least 2 million shares and a certain average true range. So we're going to break that down, average true range being how much it normally moves from low to high during the day. So let me just pull this back down into the picture here. So you can see that we have average volume, and there's also current volume. All right, so we're going to first sort that by average 2 million. So actually, you know what, before I do that, there's 711 stocks in healthcare that fit that criteria. Now we're going to work it down to 64 stocks that have at least 2 million shares on average volume. Let me just pull that over again. Now again, this volume is what it traded on the previous day, which obviously we had a long 3-day weekend, so it's a little bit light. You might see one that didn't have 2 million shares. This is the average over 2 million. Okay. Now something that's interesting, that's kind of a little bit of an advanced trading strategy, is you can also pull up. You can sort it by price if you want, like only $20 or above, whatever happens. But this is kind of an interesting one here, relative volume. It essentially means the last trading day traded a certain amount relative to what it normally does. So if it normally does 2 million and it ends up doing 4 million, it did 2 times what it normally does. So this is one way to find institutional activity just from volume. Then of course you pop it into a chart and see, is it breaking out? Is it exhausting? That kind of stuff. You want to add the volume equation with liquidity with what it normally did with what's going on in the chart. You want to make sure all of those things get mixed in there. So basically what we're going to do is we also want to determine whether or not stock's in an uptrend, a downtrend, all that kind of stuff. So if we expand the technical parameters here, and again, I'm just sticking to technical analysis. Let's just say, for argument's sake, use a 20-period simple moving average, and we'll put price is above the 20-period simple moving average by 20%. So we have none. So all of these stocks are not trading above that moving average. So that's actually pretty interesting there. So that's by 20%. We can actually pull it down. Let's just put it above the 20 SMA just to kind of make the point. So 20 out of the 64 are actually above the 20-period moving average. So as a swing trader and or day trader, we're filtering down what could potentially be stocks that we would now take to a different list, which is over here at charts. And now you start to look at stocks that you have filtered. So out of all the possible stocks on Wall Street, you've picked what has been relatively the strongest sector over the last 3 to 6 months. You've filtered it down to stocks that have decent liquidity. We didn't filter out by price, over $20 or whatnot. We could if we wanted to. And now we've also filtered it down to they're above the 20-period moving average. So now you would actually go down into stocks and see if there is decent reward in exchange for the potential risk. So like Agilent here would be one of the stocks that I would probably have an alarm set at 43. I wouldn't do anything until then. It looks like it's gotten up there about 5 times and hasn't been able to get through that level, give or take. What's actually interesting about that particular one is the more times a stock knocks on a particular price action, the more likely it's going to break through. So that's actually a pretty interesting one. Some of these other ones like Aetna, Boston Scientific, a couple of these here have been pushed to the extreme here. I would kind of let them pause a little bit. This seems to have the best trade potential through there. I want to just go over one more quick idea here, which is within my screen. You can see I have a whole bunch of different stocks by liquidity and price, which is kind of a filter from what we just showed here. But this is actually the point. I have one here that's volume, price, and ATR. So let me just pull that one up for a second. So essentially what this one is doing, over $20, over $1.50 average range from low to high, over 2 million shares, and stocks only. I don't have ETFs in there. So you can see this list actually has 101 stocks. So what I would normally do is I would go into these stocks and I would say, okay, it's meeting the volume criteria, it's meeting the price criteria, as well as the volatility criteria, meaning it's going to give me enough price action on average to warrant putting into a potential game plan for the day. Now, to just take this one step further, which is really cool, is I want to filter all of that out, and then I also want to know which stocks had a really good or a really bad day yesterday that I could look for follow through today. And again, you could also add within the context of whether or not it's rising or declining to look. So let's just say, for argument's sake, I go over to change from the open and I use above the 20 period simple moving average. So again, we'll just stick with the long side just to keep things simple. So that boiled it down. We just reduced some stocks there, and now I want to go over here and pull up change from the open, and I'm going to put 2%. Now remember, looking at a candlestick, this is not changed from the previous close. This means that this candle had a large green candlestick. Up 2% from the open is a pretty decent move, right? So think about what we just filtered out here. Let me just pull it all back into the screen. Above the 20 period moving average, which means it's essentially short-term bullish. We could look into the individual charts, and we will in a second. Over $20, average true range over $1.50 from low to high. It's got decent liquidity that I particularly look for. It doesn't necessarily need to be the same one that you look for. Only stocks, up 2%. So now if we go to those charts, we will see that they're all, let me pull that back into the screen. We'll clearly see that EXPE here has the best opportunity as we cycle through. So just to keep everything on the screen here, looking at most of the charts on the left, we're looking for bullish price action. Again, just because it's above the 20 doesn't necessarily mean that it's bullish. It could be in a downtrend just breaking above. PXD breaking out a little bit here. Okay, some of these are decent downtrends. However, it looks like EXPE is the winner here, which would take us over to looking at this same chart right here. First, going out to the weeklies. You can see clearly on the weeklies we're breaking out. We just took out, looks like this 88 to 91 level was pretty big over the last year or so. And then going out to the daily, you can see we have a pretty nice breakout above the 95, 75 level, and then maybe 90, 96. Clearly an increase in volume, clearly a clean breakout, clearly rising above the 20. So again, not necessarily saying jump into this. It's a way to filter down your stocks to the best opportunity with the greatest likelihood of follow through. And again, we went out to the weekly charts so you can see where the stock is, and you can see it's literally off the charts where you're looking at some room to go. However, obviously when the futures are down this morning and stocks are breaking out to a new high, it's a stock to keep on your list. You don't necessarily want to close your eyes and go long if the market gets hammered this morning. So everything has to be done in a relative fashion that matches your resources, your goals, the right stocks, the right timing, and ultimately that's how I start to filter down my list. So I hope that helped.